Good morning. Welcome to the XM.com weekly market update, and we're joined again by Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Straight to the domestic market, the Australian CPI numbers came out last week, coming down, which is a good sign, came in at 6%, so it's still a relatively high figure, but at least it's heading in the right direction.
Certainly is heading in the right direction, and it'll be interesting in about 3 hours' time whether it's heading in the right direction enough for the RBA decision.
Yeah, well, it looks like it's a bit of a 50-50 bet at the moment. There's a lot of data out there suggesting the inflation rate will come down quite a bit in the ensuing months. But whether or not the governor's willing to put interest rates up again, probably needed, I suspect. But will they do it or give the public a bit of relief?
Yeah, I'm erring on the side that I don't think that they can swim against the tide, considering you had the Fed last Wednesday, ECB Thursday, Japan on Friday, and you've got UK this Thursday, 25 with a 30% probability of 50 basis points. So yes, I think that they will do it, and I'm not sure what that'll do to the Aussie dollar. It's back at above 67, so maybe it's baked in already.
Yeah, and it's sort of interesting as well. If you've got CPI at 6% and your reserve bank rate at 4.1, that's got to be in the reverse.
Yes.
So there's only one way for that to happen.
100%.
So I suspect if not this month, then we will get another interest rate rise next month.
And we'll touch inflation at the end because crude prices.
Yeah, exactly. Retail sales came out as well, down quite a bit.
Yeah.
Not unexpected.
No, it's
obviously not. The budgets of a lot of families are struggling under the weight of interest rates, so that is not an unusual figure.
No, and what the frightening point's going to be as far as corporate downsizings. So people are spending less, so they don't need as many people in the shop or whatever. And we've just got to work through this over the next couple of months leading up to Christmas.
Yeah, it's a bit of that flow-on effect, isn't it?
Well, it's savage.
Yeah. China, we touched on this quite a bit last week. There's a lot of the news coming out of China is not flash at all, on a whole range of scenarios, both politically and economically.
Yes, and property.
Yeah, and the property market seems completely shot. But if without that stimulus, which hasn't really come yet, then obviously the demand for iron ore would be lower, which in turn you would think leads to a lower Aussie dollar.
Yes, you would think so. But it's back at around about 106, I think, for that iron ore price. I heard yesterday, I was doing a TV interview and the anchor said it's 106. Something I follow fairly closely, and also copper prices. But you're seeing that Aussie dollar, and I'm not sure where we take iron ore. Do we move it back to that 130, 140? It's going to be good for the producers, but you need demand out there in China, and we need also the finished goods of the people being able to buy those goods, and it's high inflation. That's going to be a tough one.
Yeah, and I think a lot of that demand from China, probably over the last decade, was from the property market, which is completely stopped over there because they've just got so much excess.
Yeah, 90 million, my understanding is 90 million apartments that are vacant. Bit of inventory.
It's hard to fathom, isn't it?
Yes.
Over to the Eurozone, they put interest rates up again, only 0.25%.
That's right.
Which once again was expected. A similar problem to what we have here in getting that inflation rate under control.
Yeah, very much so. And I won't be surprised for President Lagarde to have another lash probably in September. We'll just see. But I agree with you 100% on that one.
Yeah. And looking at the euro dollar as well.
Yep.
Around that sort of
just under 110.
Yeah.
We had last week, we had the Fed shift rates to the upside, also ECB, as we mentioned. So possibly that 108 to 112 sort of handle, little whipsaw between that. It seems to be in a little bit of a tight channel over the last couple of months. You got to go back, to really June when it was under 107. But it's an exciting trade. There's always plenty of movement in it, but the chart tells a story from where we were at 97 or 96 even, 0.96 going back to October last year, and there's no shortage of excitement in currencies. No,
and it'll be interesting where the narrative is in sort of maybe 3 or 4 months' time, because you would think at that time, most of the central banks' interest rate hikes would probably be done, because we are getting close to the top. I suspect there's still a bit of room to move on the upside, but I think they're pretty close to being done. The majority
You would hope
of
so.
them.
As long as energy prices stay low.
True, exactly. That's
the wild card.
Yes. So we look at the US GDP came out as well. Another strong number. So that's quarter-on-quarter numbers there.
Big.
Very consistent, and just goes to show once again the resilience of the US consumer.
Yeah, the chart tells a story. You don't have to add much to it, and it's boom. Yeah, that's very, very healthy.
Once again, and another one, durable goods. This came in at over 4%.
Yeah.
The consensus was 1%. So it's
I know. I looked at the number. I had to double read it. Like, hang on, someone's put a wrong number in it. Is it 0.4?
Yeah. No, but once again, it's a huge number, and they're even now talking about the Fed could have a soft landing, which, like going back to the start of the year, it seemed, well, they just basically said central banks don't have soft landings.
No.
Full stop.
Full stop. That's
but
right.
the way it's playing out, like once again, you never know what's around the corner.
No.
And there's always hurdles ahead. But so far, it's looking not too bad. And the current earnings season has been pretty reasonable.
Yeah, very reasonable when you're looking at some of those big tech stocks. Wow. So, yeah, this quarter is going to be an interesting one. You know, August, September, October in the States. And I'm looking forward to, that run up to Christmas. I just want to see that continue, and it's going to be we may be on the turnaround. We've just got to wait and see.
For sure. Finally, we touched on oil last week, and having another look at it today, clearly it's on a nice little run here. Both are up significantly, particularly from the start of July. Yeah,
it's been an incredible month for trading, and traders around the globe have been long energy, and it's just paid dividends for them. Many analysts are saying 90 is the new horizon sometime in August. We're at the 1st of August today, Andrew, and at 85.50, I think it is for Brent at the moment, or 85.30. Then at WTI had a big leg up. It's be cracking through 82. I wouldn't be surprised by tomorrow. So this momentum, there's a couple of outliers. One is the seasonality play, and of course hurricanes and the disruption. That's normally in August. So if you have weather outages and those impacts to the Gulf, as far as the Gulf of Mexico with production, then that could really impact prices even further. And that's not a good sign for inflation. Like it or not, we need to have energy prices at 65 to 70 for that soft landing to take place. You don't need another spike here at 90 to 95 or $100 a barrel for crude, and that's going to everything's just going to get reversed on inflation.
Yeah, for sure. It's one to closely watch, and that could be one of those outliers.
Oh man,
which affects the way central banks manage the monetary policy moving forward.
100%, and and that Saudis are now saying, well, they're happy with these sort of prices, and this is where they want to be, and these cuts are going to be maintained in Russia. So, the energy market is one I follow very closely, and it's going to be exciting in August, because you think July was exciting. Wait to see August.
Yeah, all right, we'll certainly keep an eye on it.
Yeah.
All right, thanks for your time again.
Lovely to see you, Andrew.
All right, thanks, Pete. And that's the XM.com weekly market update.